What is going on, guys? Can you hear me? Let me know if you can hear me. AI helping with the cringe thumbnail? It's a joke, you dumb fuck. This guy, man. You know what? Fuck this guy. Fuck this guy. Already coming in trying to ruin the party. There. We don't want no negative Nancy's in this. All right. Let me just. All right. Yvonne, what's going on? Brian, BVM, Sid's Vlog, Pause It TV. What's going on, guys? Bringing that negative energy already. I know, man. I know. What's with that? All right. We have Powell speaking. I don't know. We're waiting for them to be streaming this. It's supposed to be on right now. We'll be on any minute. So let us see. It's gonna dump. Well, luckily we'll be able to see in real time, but in this case, when we're looking at the high time frames, we want to determine a bias for the day, and it's really hard to do so on the daily. That is when I jump to the 4 hour, and certainly on the 4 hour, it definitely looks like it can rally a bit more just in the short term before actually dropping. Now, the only thing is we have not taken out, what is today? Today is the 6th. We have not taken out these lows, right? So we have this low here from February 29th. This is the 4 hour chart. And although this right here, this is the S&P 500, by the way, guys, on the 4 hour. Although this right here looks very, 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 very similar to this, if you look at this, right, you see the spike up top, and then you see the decline, and then the rally back up to take liquidity before declining. The difference is, in this case, we actually took a significant liquidity level here, right? And we haven't done so yet here. So, we already, the thing is they already released what Jerome Powell was going to say. If you look on CNBC.com, and by the way, the 10-year is tanking, and I told you guys that I was going long on ZN. I ended up going long on ZN. That position is up, and I have my stop to break even, but that position is up 750 per contract. I'll go over that play again. But in terms of Jerome Powell's comments, they already released this because they don't want it to shock the market in real time, which is smart. So it says here, Powell reinforces position that the Fed is not ready to start cutting interest rates. Obviously, I think that some of this is spurred by the market and the liquidity that the market is finding. Clearly, there is still too much liquidity in the system. So they already released his remarks, right? In prepared remarks for appearances on Capitol Hill, Fed Chair Jerome Powell said policymakers remain attentive to the risks that inflation poses and don't want to ease up too quickly. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%, the central bank leader said. Powell noted again that lowering rates too quickly risks losing the battle against inflation and likely having to raise rates further while waiting too long poses danger to economic growth. And here you see Foot Locker shares plunge more than 20% as retailer post-holiday loss delays key financial target. So I think that we are, starting to see this sort of dichotomy between the market and the economy, where we are seeing more and more layoffs. where we are starting to see more guidance misses, more earnings misses. Certainly not from the Mag 7 in general, but all across the board aside from the Mag 7. Actually, we should just call it Mag 6 because, Tesla now doesn't count. I actually think Tesla can get to that 152 level. I will go over Tesla in a second. Just don't want to miss this. Who's this guy? Are you selling calls on Tesla then? No, I don't sell calls at the low.
Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. The hearing is titled The Federal Reserve's Semi-Annual Monetary Policy Report.
Can you guys hear this?
Inventive title we use semi-annually here on the committee. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I will note at the outset that this hearing has a hard stop at 1 p.m., which will be strictly observed. I see Chairman Powell smile. It's just 3 hours. I'll now recognize myself.
3 hours?
To give an opening statement, and welcome back, Chair Powell. Since you last appeared before the committee in June of 2023, the conversation in Washington surrounding inflation has shifted significantly. To be clear, it's not because the inflationary fire has been extinguished. From the most recent data available, food costs are up 21% since President Biden took office. Energy costs are up nearly 32%. Shelter costs are up more than 19%. And you'll pay 37% more for a dozen eggs in America today. As you stated in January, people are still paying more for the basics of life, and the prices they're paying are still high. Families aren't happy about it, as you know, and as our colleagues know. But according to the Biden administration, many of my Democrat colleagues, they should be thrilled. In an attempt to score political points, many in Washington have decided the best strategy is to tell people what they're feeling isn't actually accurate. They claim Bidenomics has brought down costs, and their partisan so-called American Rescue Plan put our economy back on the right track. Of course, we know the opposite is true, since inflation skyrocketed soon after the American Rescue Plan was enacted, which was predicted by several former Obama administration economic officials. Instead of working to solve the underlying issues causing high prices, the administration has played the blame game, citing corporate greed and so-called shrinkflation. Some Democrats have even trained fire on you, Chair Powell, blaming interest rate hikes, which were necessitated by Democrat spending, for the high cost and brazenly calling you to make cuts prematurely. It's highly inappropriate for lawmakers to attempt to influence monetary policy. Chairman Powell, I have faith that you will not allow politics to cloud your judgment in the fight to tackle inflation. As I have always said, you are a steady hand, and I believe you are committed to the Federal Reserve's independence, as am I. Just as you have rejected the outside pressures of politically motivated agendas, I hope you will be just as attuned to the threats of politicization when the calling is coming from inside the House. Vice Chairman Michael Barr's so-called holistic review of capital requirements and the fatally flawed Basel III endgame proposal represent a concerning trend of partisan proposals taking priority over supervision. This has real-world impacts, as we saw 1 year ago this month when the supervision and regulation arm of the Fed was late catching up to the effects of the acceleration of interest rates on the banking system. Americans were understandably shaken by last year's banking turbulence. As we continue to monitor potential instability, including bank exposure to commercial real estate, it's critical that the Fed keep its eye on the ball. This does not include enacting new, far-reaching, and ultimately harmful regulatory policy, though. As you know, members on both sides of the aisle, on this committee and in Congress, have made clear that the Basel III endgame proposal would be catastrophic for families, communities, and small businesses. Regulators should withdraw it and start over. I think that's the proper course with something as deeply flawed as the current proposal. Additionally, given that other significant proposals would have to fit holistically together, regulators cannot simply proceed with them as separate modules or using a cut and paste approach. Most importantly, as the Basel III endgame proposal is discarded or altered, I strongly urge you and other regulators not to finalize the long-term debt proposal. Instead, Chairman Powell, I would encourage you to stick to the task at hand and follow the data. The stakes are way too high to put politics over sound policy. With that, I yield back, and I'll now recognize the ranking member of the full committee.
Thank you very much, Mr. Chairman. Good morning, everyone. Welcome back, Chair Powell. While I am pleased by the progress
she's still employed?
the Fed and the Biden administration have made to tackle inflation, we're not out of the woods yet. In fact, even though my Republican colleagues refuse to acknowledge this fact, housing is still the #1 driver of inflation. Based on the latest data, housing costs continue to make up nearly 70% of overall price increases, outpacing modest wage gains. This means that until we address the underlying housing supply shortage, Americans will continue to pay an increasing share of their income on housing. The affordability crisis will worsen, and inflation will remain too high. With that said, it's hard to understand why Republicans feign concern about the economy when they're unwilling to address the key driver of inflation, housing. In fact, Republicans have only put forward legislation that makes things worse for millions of Americans, including moving legislation to slash funding for federal housing programs, including in rural America, where homelessness is rising. This abysmal record on housing is par for the course for Republicans. Since they have been in the majority, they have convened only 6 hearings on housing, on top of launching baseless impeachment efforts, censoring members, and pushing our government to the brink of multiple government shutdowns. It's clear that Republicans are too focused on drama and chaos to deliver any.
Yeah, I hate these testimonies here, guys, because it's like it leads to nothing. And this is just, if you guys don't know this about American politics, all this is politicians using a stage in order to grandstand. It literally means nothing. It literally means nothing. But I am trying to trade this setup, which is risky, before Jerome Powell grabs the mic. But assuming that there was no meeting right now, and the market is exactly flat, like 0% right now on, that was the last candle. The market is pretty flat, 0.3% on ES, 0.3% on NQ, 0.5 on RTY. Now, if there wasn't a testimony going on, this to me would be an A+ trade. We took out liquidity from buy side, and we haven't yet taken out London low. So I'm targeting London low. This is obviously super risky during Powell's testimony, but if Powell wasn't testifying here and this was just a regular trading day, this is the exact setup I'd be looking for. So I don't know. Maybe if they give Jerome Powell the mic right now, maybe we see a huge candle spike up, and then before spiking down. You know what I mean? So I may remove this actually now that I'm talking through this, and I'll wait till Jerome Powell speaks, and then I'll take the trade. Someone said Nasdaq took out London low. Yes, it did. Good eye. Very, very, very good eye. Nasdaq made the move that ES didn't. Very good eye. What are you talking about? We did take London low. Okay. So this is London low at 5088.50 on ES. Where did we take London low, bro? Where did we take London low? I'm happy to be wrong, but where did we take London low? We took it on NQ, but unless not NASDAQ, on ES. All right, this was the trade that I was planning on taking here, but I canceled it. I'm going to leave this up just because I do want to monitor how it acts. But I was planning on shorting this 5-minute fair value gap to London low on ES. However, since NQ took out London low, there's now SMT divergence between NQ and ES, and we can actually continue if NQ, if that sweep on London low was its sell side, we can actually continue up, which would drag the S&P up further. So I canceled that.
Recovered from COVID and getting back to normal, that we're in the range where ordinary monetary policy.
Man, these guys just fucking grandstand all day, just yap. Guys, there's 1,000 of you here and 100 likes. What the hell? Who do you guys want to watch besides this channel? Who? I give you the macro. I give you the trades. Who do you want to watch? Who do you want people to watch besides this channel? Be honest. Meet Kevin? That's who you want people to watch? All right. Go watch him, bro. Go watch him. Beginner Trader. Is this a channel? That's a cool channel name. JP, just close the fucking door. You got my like. Greetings from Geneva. I love Geneva. I need to head back to Geneva. Watch Powell move the market. Yeah, I think what you'll tend to see is stops get taken out in either direction. I still really like this trade, but okay, let's hear him. Let's hear him.
Opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of last year, payroll job gains have averaged 239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined, and nominal wage growth has been easing. Although the jobs-to-workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped to narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Long-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We've also continued to shrink our balance sheet at a brisk pace and in a predictable manner. A restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% objective for inflation is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-run inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Chairman Powell. And I should have noted this at the outset, but this is your 25th testimony before the U.S. Congress as Chair of the Federal Reserve, and we thank you for your service and your commitment to congressional oversight. Very much appreciated. I'll now recognize myself for 5 minutes for purposes of questions. Let's begin with what's top of mind. We have two issues that are top of mind with the Fed: regulatory policy, with the Barr proposal, the Michael Barr proposal on capital, and interest rates. We're in a political year, and the lens of a political year falls heavily on all government, all parts of government. There's a lot of debate about the past 3 years of high inflation and impact on American families. And now that inflation is receding, there's been a great deal of speculation about what
Curious to see if this trade would have worked out. Guys, get this to 500 likes and I'm giving out a hoodie. We have brand new hoodies, by the way, brand new supplier.
I say that really it will depend on the path of the economy. Our focus is on maximum employment and price stability, and the incoming data as they affect the outlook, and those are the things we'll be looking at. I can go further if you'd like.
So at what point will the Fed be forced to cut rates? What does the data, what kind of data would you point to, and do you have any updates there?
What we've said is that the committee would like to see more data that confirm and make us more confident that inflation is moving sustainably down to 2%. We have some confidence of that. Inflation, headline inflation has moved down more than 3 full percentage points now to 2.4%, as I mentioned in my remarks. We want to see a little bit more data so that we can become confident and so that we can take that step of beginning to reduce policy rates. It's a very important step. We think because of the strength in the economy and the strength in the labor market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
Well, let's pivot to regulatory policy. Chair Powell, as you know, there have been serious concerns expressed on both sides of the aisle and across America and across industries about the Basel III endgame proposal that Vice Chair Michael Barr has proposed and that the Fed is taking up. The concern is on both process, meaning how the proposed rule was developed, analyzed, and released for comment, the general concern of a lack of economic justification for these actions, but also on the substance. The proposal goes much further than the Basel III committee recommended on capital requirements, putting us at a great disadvantage.
I did not see these equal lows on NQ. I take it back. I think we're going lower. I think NQ takes out these equal lows.
Unanimous in opposition to this rule. Is the Fed listening to these comments on the impact the rule will have on everyday Americans? And what is the status on rulemaking, and what is the plan moving forward?
So you're right. We've received voluminous and very substantive comments, as well as the quantitative impact study that we put out. We got those responses in mid-January, and we're carefully analyzing them. We had asked for very specific, detailed, data-based comments, and I'm happy to say that we did get that. So we're just now reaching the stage where we can begin to make decisions about how to proceed. We really haven't made any decisions yet, but I think I can say a few things. First, we do hear the concerns, and I do expect that there will be broad and material changes to the proposal. I'll add that I'm confident that the final product will be one that does have broad support both at the Fed and in the broader world. As far as process is concerned, we're really not at the stage of making decisions about that. That's down the road at least a bit. I will say the question we get is reproposal, and I will say that we haven't made that decision, but if when we get to that point that turns out to be the appropriate thing, we won't hesitate to do it.
You won't rule that out. You would not rule that out at this stage of the game, reproposal?
Not at all. No, I think it's a very plausible option. It will depend on how things lie at the time when we reach that point.
Okay. And there's a lot of concern about the interplay between different parts of the rule. And if you change one, what does economic analysis
What the hell
look
are they
like
even
for
talking
the
about?
new proposal? So it is good to hear that you'll be methodical and the Fed will do its traditional role of building consensus around the substantive changes. And that is your intention.
That is right. I said this would be a thoughtful, deliberative process. It's more important that we get this right than that we do it fast. We understand that. This is an important rulemaking, and it's going to have potential implications for the economy and the people we serve. We're going to take our time and do it right.
Thank you, Chairman Powell. The ranking member, Ms. Waters, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. Chair Powell, I want to talk to you about housing, but before I get there, let me address the issue of mergers. Last week, I led a letter along with 15 committee Democrats to you as well as DOJ, OCC, and FDIC, expressing my strong concern about the lack of progress you have made in updating your bank merger review procedures. This is critical now that we just learned of another mega merger involving Capital One and Discover, which would create the 6th largest U.S. commercial bank with a major role in the credit card market. For far too long, experts have raised alarm that there is a rubber stamping process of bank mergers where virtually all applications are approved. All the while, unbridled market consolidation poses great risk to consumers and entrepreneurs. What is the status of your updates to the merger review process? And does the Fed plan to convene public hearings on the Capital One and Discover merger?
So I believe we're in regular contact with the Justice Department on what's going on with their review of merger practices. We're looking at that and considering. I think on the potential merger with that you mentioned, we haven't received an application, so there's really not much to say yet. It's early days. When we do get that application, though, we're going to evaluate that merger as always under the factors laid out under the law, and that's our commitment.
So you do believe that your bank merger procedures are ready to do the work that's necessary when you evaluate this possible merger?
I do.
And are you supportive of organizing community hearings on this?
I mean, the Fed has nothing to do with mergers. I don't know what the fuck she's asking this for. 500 likes, guys. 151 more, and I'll give away a hoodie.
That's not a conversation we've had yet. We literally don't even have an application for the merger yet.
Thank you. We'll stay in touch with you on that. So turning to the national affordable housing and homelessness crisis, where we've seen steady increases.
What does he have to
year
do with
after
housing
year
or homelessness?
in home prices and rent costs, which are a symptom of the chronic undersupply of affordable.
Guys, this is what pisses me off here, right? These people are elected. They get paid a high salary, on top of which they obviously have access to all kinds of means to make additional money, book deals, interviews. They get, jobs at MSNBC or Fox News. And they're elected to implement policy, right? Like homelessness, crime, mergers, things of that nature have nothing to do with the Fed. Now, I'm not defending the Fed, but this is like an abrogation of responsibility. Like, they are the ones elected to implement policy, not him. So why the fuck are they grilling him on policy that they are elected to implement? Just enrages me.
I think the overall story is that goods price inflation has turned negative. Goods prices are actually coming down a bit. Housing services inflation, you can see from currently entered into leases that as leases turn over, the increases are going to be smaller. So in our forecast and in everyone's forecast, housing services inflation comes down.
It's been reported that the methodology used to assess housing costs as an indicator of inflation is imperfect, namely because it considers costs based on both new and old rents, including for owner-occupied housing on a month-to-month basis. This results in stale data since families' housing costs typically do not change unless they move or their lease is up for renewal. So to address these imperfections in the housing cost indicators, the Bureau of Labor Statistics and Cleveland Fed created an improved methodology based solely on new lease rents, which is referred to as new tenant repeat rent index. Has the Fed incorporated this new indicator into its economic assessments? If not, why not? And so, what changes has it had on the level of housing inflation?
All right, this is so stupid. Obviously, we're going to stay here and play it because in case they say anything important, but I also want to monitor the markets and look for trades. The markets are also clearly waiting for them to actually say something substantive, right? So in this case, we have NQ took out the RTH gap. There's one right here too, though, right? This is a pretty ugly day. This is yesterday's RTH gap, and there's an RTH gap here. So NQ took it and ES didn't. There's quite a bit of divergence here going on, which is the reason that I'm not interested in yet taking a short. So if you look at ES, S&P did not fill the RTH gap, right? NQ did. So it's like, I'm not looking to short here because of the fact that there's quite a bit of divergence. And NQ already took out RTH, already took out London low. And so, if NQ wanted to rally from here, as you can see, the low time frame market structure is now bullish, right? We had a break of structure, came back to retest the fair value gap. This was probably a pretty nice scalp. It's going to take ES with it. So I have zero interest in shorting ES, and our stop would have almost been hit, by the way. So thankfully we took that off. And I think that eventually NQ is going to address these equal lows right here at 17, around 17,835-ish, somewhere around there. But I think this is a pretty tough shorting environment just yet. I think in the short term, you know, on the lower time frames, you need bearish market structure before taking a short. And the fact that NQ already filled its RTH gap, and there's one up above here too from yesterday, this is a tough short. The fact that this testimony lasts a long time, we might get a nice move in the PM as opposed to now, right? Because this testimony is going to run until lunch is over. And by the time lunch is over, then we're ready for a PM move, potentially a PM silver bullet, right? So in this case, I think shorting this is a tough proposition here. I think there are scalps to be had in both ways, but I think shorting this is a tough proposition here.
Inflation is the biggest issue facing American households, and in my view, there's three principal causing. Certainly, we had supply disruptions, but we've had unprecedented fiscal policy laxity. You described it in a recent interview as unsustainable. But we also think that the Federal Reserve, in my view, and many people on this committee commented, should have reduced accommodation after the pandemic sooner. One of the things coincident with that, which is what I want to talk to you about, is that the FOMC announced in August of 2020 this flexible average inflation targeting framework right in the middle of the pandemic, which many of us didn't understand why.
What do you mean opinion on Apple? Like in terms of what?
Saying the Fed could allow inflation to rise above 2% and stay there above that level for some time because the Fed had such challenges in getting the price level to 2%. That was a major shift in the Fed's approach. Do you think, in retrospect of now what we've witnessed over the past 4 years, that that was a mistake in hindsight to change that framework, and is it under review?
So we said we would do a review on a 5-year basis, and that means we'll be starting that review toward the end of this year. So we really haven't started. I do think that the question you raised will be one of the questions we look at. But the bigger question really is that change in the approach was really based on the fact that we'd had very low interest rates and very low inflation for a long period of time, and policy was always very close to the effective lower bound, so there wasn't any firepower for central banks. And so it was a way to keep inflation expectations anchored at 2% and not have them slide down. Now we have entered a different period. The pandemic really may have changed that in a sustained way. We don't know that yet, but that's the big question we'll be asking ourselves is the effective lower bound to be thought of in a different way now? And if it were, that would have ramifications for our framework. But we haven't begun the review yet. It'll begin at the end of this year and probably end late the next year.
Thank you. Yield back, Mr. Chairman.
Gentleman yields back. We'll now go to the gentleman from New York, Mr. Meeks, for 5.
All right, I see you guys don't want a hoodie. 416 likes. We are 84 away from somebody winning a hoodie.
2019, 2020, the entire world was under the unprecedented pandemic with COVID rate. Is that correct?
Yes.
At the time. And that changed a lot of things with reference because not just for the United States, but for the entire world. And it affected the economies of countries just about on the planet. That's not also correct?
Yes.
And supply chains was disrupted. In fact, I can remember many Americans and people around the world could not get toilet paper or paper towels and some of the basics. And so the prices
this is such a useless testimony.
Of supply
and I think the
demand
market agrees.
Skyrocketed, causing the inflation, not only in the United States, but basically all over the world. Is that correct?
Yes.
And so therefore, the Fed had to do certain things because of what we were in at that particular time. We couldn't just go back and act like the pandemic wasn't there. We had to do something to try to make sure that we were able to get through the pandemic. Is that not correct?
Yes.
And now we're at that point where we're about to get through this pandemic. And we can look at the rest of the world. All
right, guys. I don't know how much more I could take of this. I'm going to go through and analyze the market. So let's make better use of our time. Let's make better use of our time. Are you in an ES trade? No. Pure BS. What are they talking about? Yeah, exactly. No, Joe, I'm not in an ES trade because I was looking to take it short until I saw that NQ filled the RTH gap here. And also took out London low. So if you look at NQ on the lower time frame, it looks actually to be pretty bullish here on the lower time frame. So I didn't want to get caught up in that. SPY looking better? Better in terms of what? Better in terms of what? Today's Wednesday, is that correct? Oh boy. Let's see if RTY has a trade. When ES and NQ are sleepy in terms of direction, I start to look at RTY, I start to look at oil, and I start to look at gold. Why are the, let me see where the Treasury futures are at. Is Apple at a good price to buy? You're making an investment, right? You guys need to start, not you guys, but some of you need to start thinking of this as an investment, not just throwing money at a 3 or 4 letter ticker. What do you like about Apple? Have you taken a look at its balance sheet? Have you taken a look at its cash flow? Have you taken a look at its growth? Are you optimistic about its product lineup? What does its net income look like to you? What about its dividend? Have you taken a look at any of these things? Or have you just picked a company that is popular that has dropped and you're just going to throw a bunch of money at it without taking an investment thesis into account? Tesla right here, you could see that on October, which is so wild because October 2023 is when the correction ended. But for Tesla, October 2023 was when it hit another bear market, essentially. But when Tesla breaks down these channels, they usually have a very violent move down. A lot of times Tesla will continue in these upwards channels, but in this case, you see that Tesla has a very violent downtrend if it does break one of these ascending channels, and it just broke here. I would not be surprised to see Tesla at 152, to be honest. Would you do a class on analyzing companies? I don't know, maybe if enough people request it. 8.7% Apple correction for 6 months. I don't know what that means. Apple's down way more than 8%. Apple's down 15%. And that's just since December. So I'm not sure what you're talking about. All right. But if you like Apple, I mean, any blue chip company that's down 15%, then yeah, I mean, obviously it's a good buy point. Any blue chip company that's down 15%. But I guarantee you what's going to happen is, Apple will drop. It might even drop to, if you take a look at, if you pull up the volume profile tool. Wow, Apple's even below its next highest shelf here. Yeah, this is an interesting price point for Apple. Let's see if we go back to January 2022. So if Apple drops below even 162, then I guarantee there's going to be people that aren't going to buy it. And then once it pops back up, everyone's going to want to buy it at 190. NIO is the new Tesla. Didn't it report earnings? NIO's the new Tesla. It's $5, dude. Went long Meta. Oh boy. Yeah, I definitely don't like that trade. Definitely don't like that trade. Good luck. I'm rooting for you, but I definitely don't like that trade.
Association letter from the American Farm Bureau Federation, the National Cattlemen's Beef Association, among 7 others. Next, a joint energy trade association letter from the American Gas Association and 4 others. And lastly, a letter from the American Public Power Association and the National Rural Electric Cooperative Association.
Without objection.
Thank you, Mr. Chairman. Chairman Powell.
What's
I'd
up,
now like
Premier?
to focus on how.
A response to your question. I was hoping to get your thoughts. Thoughts and prayers, bro.
Dodd-Frank, Congress mandated central clearing as a way to reduce risk in the system.
Ask me a more specific
The number
question,
of banks
man,
that
please.
can clear derivatives for end users has reduced over time, making it harder for
Google,
end users
yes,
to
I
find a
think
bank to
Google
offer
is
this service.
definitely
There are
at a
some
good pickup
estimates that the
spot for
Fed's
the long term,
proposal will
too.
increase capital for
I
this
think it can
activity
still
by
drop
80%.
to the 120s.
I'm worried that
but
this will make it even harder for end users to.
I think it could still drop to the 120s, but yeah. I mean, anytime you get a blue chip that's down 15%, you want to, and it's something you want to invest in, yeah, you definitely want to pick it up. Diz has some caps below. I told you guys about Diz. About Target, about Bud. You know, Diz at 80? Fuck me, man. That was such a good opportunity. Target, same thing. I told you about Target when it was in the low hundreds after their controversy, right? Like anytime there's a PR controversy, anytime there's a PR controversy with a stock that has an unbeatable business and that is healthy from a financial standpoint, if there's a controversy that brings the stock down irrationally, like there was with Target, with Bud Light, with Disney, you know, because of this go woke, go broke type thing, you want to buy that. That's all fucking rubbish, right? Like you think a company like Target or Disney is really not going to turn things around ASAP if they're pissing off their customers? Of course they are. The one that really surprised me was Walmart, because usually after splits, you do see more of a drop, and Walmart did drop like 5% or something after it split. Not even. It was like 3% and then continued to rally. I was hoping it would drop more, just like every other company that splits, but yeah. Matterport. I don't know much about real estate stocks, honestly, like real estate penny stocks. You know, you say you think it's a steal. Okay, then you have a better idea than me. This isn't the type of stuff that I invest in. I'll be honest. I'm not, you know, like I'm the last person that will look at stocks like this and root for them and, you know, say that they're super underpriced and that this is going to hit it big. Like I'm the last person that invests like that. So I'm probably the wrong person to ask, honestly. I don't even know what they fucking do. I don't know why they went from $40 to $1. That's usually not something that I would invest in. I'll be honest. Now, there was a time when penny stocks were so easy to trade, and that was during 2020. I was all about trading penny stocks, not owning them, but just trading them. But in terms of this, like, just looking at a company like this was $40 and I was trading at $1. I mean, I'll root for you. I hope you make money. It's just not my type of thing. TGT up 70% plus dividend. Yeah, this is when in the Discord I said that Target at 100 is a steal, Diz at 80 is a steal. Bud Light was a steal as well after the Dylan Mulvaney PR controversy, and it dropped to like $50. All of these companies that that tank because of I don't know, I guess wokeness or whatever the political reason is. Like those are types of companies that should make you salivate. Same with Google. Like, you don't think that they're going to make adjusted changes to their AI if everyone thinks they're ridiculous? Of course they are. Of course they are. Appreciate you, Demetrios. Thank you so much for the donation, man, to St. Jude's. Thank you. Do you think this is the best time to slow down and lock in because recession on the way? I have no idea what you're invested in. It depends. There isn't one thing that's going to apply to everybody. Man, I wish Broadcom gave us a little bit more of a retracement. I think Broadcom, let me see something. See, Broadcom's PE ratio is at 40. If you take a look at NVIDIA's PE ratio, 72. AMD's PE ratio is probably even worse, 387. AMD is horrible PE ratio. If you take a look at ARM, it's the worst, 1700 PE ratio. If you take a look at Intel, probably decent. Oh, not even 107 PE ratio. So if you take a look at, what is the other one? Qualcomm. Qualcomm is only a 23 PE ratio. So really, out of all the chip makers, Qualcomm and Broadcom, NVIDIA has good PE? No, it's not good PE. It's not as high as AMD's or ARM, but it's freaking really high. It has like 15 years of growth priced in. Well, it's a good question. How's it a good question? Like if my cost basis on my portfolio, right? Like if I bought Apple at $25, do you think I'm going to sell because of a recession? If I bought Apple at $25 in 2008, do you think I'm going to sell that because of a potential, because I'm trying to guess when the recession is? If you bought Apple at 185 because you thought it was a buy the dip situation, and now we're in a recession, that's very different than me buying Apple at $25. So no, respectfully, it's not a good question, because it depends on where you are in your investing journey, what you hold, what your cost basis is, time left to retire, right? Like if you're in your 20s and you have 40 years to retire, you think you should start selling all your stuff? If you're 64 and you're going to retire next year and your portfolio is at all-time high and you're worried about a recession, yeah, probably you're going to start letting stuff go. So it's not respectfully, it's not a good question, in my opinion. I think everyone's investing profile is different. If you have 100% Palantir / Tesla portfolio, do you think that your portfolio is the same as someone who has a much better diversified portfolio? It's everyone has a different situation. So, depending on what your cost basis is, what is your view of the companies that you hold? Do you like look, investing is really easy, right? It's just buying good companies at prices that people are too scared to buy them at. That's all investing is, right? And I say this all the time. Trading is as hard as it gets. So trying to day trade is extremely difficult. I want to make investing as easy as possible, right? And investing is literally the easiest thing possible. All it takes is time, right? So when things are down 15, 30, 40%, and people are scared to buy them, and you see that there are all of these great companies by any objective metric on a fire sale, you just want to buy them and sit, right? That's how easy investing is. So respectfully, asking if you should sell now, I have no idea who you are or what you hold. I can't give you an opinion.
Is not, while they're making money and while households, people do buy that, it's diminishing their long-term advantages to make progress. So you're just going to leave that alone?
Really not appropriate for us to comment. On if I'm commenting on energy policy, I should comment on everything. We have a mandate which is maximum employment and price stability. We take decisions by the legislature and by the administration as a given. We're not in charge of second guessing them. It's just not our job.
Okay, well, all right, let's say we're not going to second guess them. I will. I believe that the energy policies that this president and the Democratic Party have supported are causing a huge boom in prices staying high. They will not come down. A boom in attacking the energy industry, jobs that are associated with it, our foreign policy as it relates to contracts that we have signed with foreign countries, giving up the natural gas market almost entirely on a world market to Qatar. It has a huge impact on whether we are going to keep prices high or control these prices. It has a huge impact on, I think, your monetary report about how many houses get built, how many jobs get filled, whether we have jobs in place, whether we continue to have more jobs available than workers that are there, because over-regulation is having a lot to do with the nervousness, not only on this panel, but also by the American people. It would be my hope that you would pass some sort of a memo and tell them you have no opinion, but you want them to see what the impact is. I want to thank you for being here. Thank you, Mr. Chairman. I yield back my time.
Gentleman yields back. The gentleman from Connecticut, Mr. Heim, is recognized for 5 minutes.
Thank you, Mr. Chairman. And Chairman Powell, thanks for being with us today. I have a question, but I want to start by acknowledging, not celebrating, but acknowledging what has been a really remarkable soft landing in our economy. And I'm not celebrating because the American people, consumers, are still feeling the effects of high prices. Wages haven't caught up with prices in some instances. But I think that it would be fair to say that observers would never have predicted the conduct of this economy. You yourself said it in the final.
He's congratulating him on a soft landing. I'm really curious to hear this. Also, we would have got stopped out, so gotta tap ourselves on the shoulder for not taking that trade.
Actually had a very strong year. So I want to acknowledge that and acknowledge your commitment to independent monetary policy. And because I'm still burdened with this idea that truth and facts matter, I want to point out, especially having listened to my good friend Mr. Sessions talk about the energy market, truth and facts matter. We are producing more oil and natural gas today than any other country on the planet. We are the world's #1 energy producer. I could spend my entire 5 minutes sort of pointing out facts. The fact I want to point out here, and this comes right out of the report, is that the premise that inflation is Joe Biden's fault, is fiscal policy's fault. First is faulty because half the fiscal stimulus that occurred in the face of the pandemic happened under the previous president, Donald Trump, and it has faded. And this report makes the case. Core, and I quote from it, core goods prices have been declining as supply bottlenecks ease and import price inflation falls. So, Mr. Chairman, I don't want you to comment on that because it gets a little bit political, but I do think it's important that we keep some foot on the plane of facts. I do want to ask you a question, though, Mr. Chairman, because I always worry about risks that we see and risks that we don't see. And I want to use the remainder of my time to talk about a risk you're very conscious of, which is the overhang in the commercial real estate market. As you know, the Financial Stability Oversight Council identified commercial real estate as perhaps the most salient risk to the financial system, $6 trillion roughly in loans, half of that on bank balance sheets. In a 60 Minutes interview a few weeks ago, you characterized distress in the commercial real estate market as sizable but manageable. Do you still feel like that risk is manageable? Do you feel like you've got the visibility and the transparency and the tools to address it? It makes me nervous because this has echoes of 2008, 2009, when vacancy rates were declined relatively rapidly. We're not seeing that right now. So how do you feel? Does that risk continue to be manageable, and do you have the tools to manage it?
Yeah, I would say yes to that. I think it is manageable, and we've been working hard to management for some time now, really. And what it really is it's a lot of downtown real estate where there's too much office supply because of work from home, and also the kind of downtown retail that is no longer as profitable, and things like that are really at the heart of it. So what we've done is we've looked at banks that have significant concentrations, and we've been in touch with them to make sure that they have a plan to deal with that. There will be losses by some banks. It isn't really the big banks. It's really medium and small-sized banks that have these higher concentrations. It's going to be with us as a problem we'll be working through, I think, for several years. And the idea is you've got to have enough capital, enough liquidity, and a plan to take the losses that you're probably going to take. And so that's what we're doing. We're very active in this space with small, medium-sized.
So let me ask you about that. Sorry to interrupt, but let me ask you about that. Silicon Valley Bank, wild irresponsibility inside the bank, egregious irresponsibility on the part of corporate treasurers who put so much on deposit. The Fed also had some self-examination to do because the examiners and the supervisors of the bank, quite frankly, were not doing what they should have been. So we might be forgiven for being a bit skeptical of claims of being on this. What has changed in the context of Silicon Valley Bank that gives you the confidence that supervisors and the examiners will be on top of this?
I see it with my own eyes, but frankly, there's a risk that we would overreact to something as significant as that. It's not like we wouldn't have reacted very, very strongly to what happened with Silicon Valley Bank, and we have. So I know that our supervisors are out there, and we're hearing back from media reports that we have been engaged with medium and small-sized banks principally on this. So I am confident that we're doing the right things there, and I do believe it's a manageable problem. If that changes, then I'll say so.
Thank you, Mr. Chairman. Yield back.
The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Powell, for being here today. I'd like to associate my remarks, or myself, with Mr. Hill's remarks earlier with regards to the FDIC proposed long-term debt requirements that are based on risk weighting of assets. I think it's an ill-thought-out proposal, and hopefully your position on FSOC, you'll be able to advise them and hopefully guide them that this is going to be held up until we actually get a Basel III rule. In October 2023, the board issued a proposal to update the debit interchange fee cap and regulation II. This is very concerning, given the data from both the GAO and Fed's own studies show that Reg II has significantly harmed access to free checking and other banking services for the country's poorest citizens. Yesterday, I introduced the Secure Payments Act, which would prohibit a final rulemaking until the Fed, among other things, studies the impact of the board's proposed rule, completes a quantitative impact analysis specifically as it relates to affordable banking services for low-income Americans and reports those findings to Congress. I understand the Fed acted here because you feel you're facing litigation, but I urge the board to proceed with extreme caution with any type of price control proposals, especially since the first iteration was so clearly harmful. Chairman Powell, knowing of the hardship caused by this policy on low-income consumers, does it give you any pause to continue down this road?
As you know, this rule is out for comment. We extended the comment period to.
All right. Yeah, not much said there. So interesting that ES did end up going up. So thankfully, we did not take that short. And for those of you that are joining late, the reason I didn't is because two reasons. One, NQ had taken out London lows. Also, NQ had filled its RTH gap, the regular trading hours gap, this one right here. Now, ES hadn't yet, but just the fact that NQ had is very, very significant. A lot of times people end up trading NQ without looking at ES or ES without looking at NQ, and it's absolutely imperative to trade, to look at both when you're trading, especially if they're diverging. Like this, right? He said no recession. Oh, you're talking about the soft landing? Yeah. I mean, come on. Nobody should take that seriously. So that is the reason that I abandoned a short on ES was because of NQ. Now we have divergence between NQ making lower highs, ES making higher highs, and ES taking out its 930 open high, right? This right here is ES's, this right here is a 930 candle. So it took out its 930 open high. I don't need this. It took out its opening high here, right? So we can just mark this as 930 open. It took out its opening high, and NQ is diverging with ES. So NQ is weaker than ES. Remember, NQ went lower than ES, took out its RTH gap, took out its London low. ES did none of that. So NQ is a lot weaker in the sense that it already breached significant lows and it cannot get above its 930 high. This right here is NQ's 930 high, right? So if I was to short one, it wouldn't be the S&P 500. If I was to short one, it would be NQ. That's the one that I would short, right? I would need confirmation of this because the indices are up today. I would need confirmation of this for sure. But that's what I'm looking at now. Now I would look for shorts, and then hopefully, hopefully. I would look for shorts if we get confirmation. So SMT right here, this SMT divergence is holding up well. So now what I need to see is market structure breached and then a retracement before taking it short. Now, this SMT can get blown through. NQ can eventually take out these highs. And then what I would look for there, if NQ starts trading above that 930 high, what I would look is for NQ and ES to head for this upper RTH gap here. So this upper RTH gap was left yesterday, still unfilled, right? So this is now where we wait for confirmation. There's no need to front run trades. I see traders all the time just taking stabs at shorts and longs. Zero confirmation, zero real thesis, just vibes. That's it, right? Just going off of vibes. So that is what I'm currently looking at right now. Interesting enough, oil futures taking out a major high, but there is another high up here. So cannot short oil at all until it addresses this as well. If we take a look at gold, what's interesting about gold is it is retracing up into the high that we saw back in, what was this, December? Yeah, December 2023. So want to see how it handles that high as well. This sucks because I actually had a long on gold, which I sent out in the Discord, and I had a long on oil, which I sent out in the Discord. The long on gold ended up closing it very profitably, but nowhere near what this would have been, right? This right here would have been a $10,000 move per contract, and they ended up closing it for like a little less than $1,000 per contract. It was a short-term long. And then the long on oil, I was stopped out yesterday on this wick. No, sorry. Was it this wick? This is not even oil. Sorry. On oil, I was stopped out on. This is where I was stopped out. I was stopped out here. Before this entire rally. So kind of sucks. I was only stopped out by 0.5. So yeah. Look at them pump this trash. I mean, why are you mad? Don't you have stocks? Why are you mad that stocks are going up? CC says, saludos desde España. Z, ¿puedes darle un visitazo al Euro USD? Oh, boy, bro. CC, no hago cambios en Forex, hermano. Lo siento. Trading should be called waiting. It should. And most people would be more profitable if they did. What about the Indian market? Yeah, I'm not sure. I'm not sure what is the word on Cumin futures. Completely irrational? It's not irrational, bro. It's a market. It's a market. What's irrational about it? You have extra liquidity and no real reason for the market to tank. You know, and we came out of one of the longest bear markets in history. This right here was one of the longest bear markets in history. It lasted over a year. So we came out of it, and then we even corrected last year from August to October. It was a huge correction. Do you think AMD will keep rallying? You know what? I actually thought that if you look at the daily, I actually thought that yesterday they announced some new AI product today, by the way, but I actually thought that the daily was setting up for a short for sure. And I even sold a credit call spread. But, you know, it has time left for expiry. But I actually thought that it would actually not tank, but, you know, I still think it will do this. It's just a matter of timing it. You have the consolidation, the manipulation, and I think it will get back to this consolidation level. Maliska, oh, I just answered your question. Gold all-time high, not on futures. Gold futures all-time high on gold was 21.71.5. So we have about 40 points left. But if you're talking about GLD, yeah, actually, you know what? What was that? Oh my God, there's my gold long. This hurts so bad. I mean, I made nice money on it, but blah, my God. I say you could trade GLD at the money calls. 226. Oh my God, those calls would be soaring. You want to know when I sent that out? Here. 226 was here. Jesus.
Agencies, and here I'm including Fed, FDIC, OCC, CFPB.
Any plans for Tesla? Why do people keep asking about Tesla? How much Tesla did you guys buy? I mean, obviously Tesla is not going to go up if Tesla is going down. I mean, Tesla is like 0.01% of my portfolio. It's not even a consideration for me. But I wish Tesla can get up to this fair value gap here and retest this trend line like in the 190s. If Tesla can get to the low 190s, I would be really happy. Because then I would actually sell calls and maybe hedge a bit more, but would you buy leaps on Apple here? No. I see the advanced money destroyer stung you as well. Yeah, dude, I had like 2 contracts. I don't go heavy on stuff like this. I'd much rather keep my money for investments and day trades, and that's it. Short Apple? Okay. Good luck with that, Donald. That SMT is still holding up. This is wild to me.
Tests. What are you going to do to address that overlap?
So we're in the middle of just at the beginning, actually, of deciding what to do about Basel III. And part of that may be the interaction with the stress test. So I haven't got anything for you on that today, but that's certainly an issue that presents itself.
We'd like to continue that conversation. I do want to touch on the bank failures of last year very quickly. Do you think that the banks that ultimately needed the government bailout lacked sufficient capital, or was it more of a management problem?
So with Silicon Valley Bank, it wasn't really could they have used more capital? I mean, they were actually raising capital. It was a capital raise that they announced that triggered the run and everything. So you can argue that it needed more capital, but I wouldn't say that was the proximate cause, really. It was a funding structure that was all about too much concentration of
well, many of us are. I'm asking the question because many of us are very concerned that those failures are being used as an excuse to raise capital standards across the board. And because the SEC just released its climate disclosure rule this morning, I'm going to touch on the climate-related question for you. FSOC, the FSOC chair has repeatedly stated that climate change is, quote, an existential threat. Presumably a threat that is existential affects banks.
Now they're fucking asking about climate change. I can't take this. I'm looking at the Bank Term Funding Program. This is the Fed's program that was funding the banks. It ends March 11th. That's in 5 days. Interesting. All right, I need to see this basing up here. In the short term, looks like NASDAQ is extended here. So what I want to see is a break of structure. And likely because it is 11:20, will likely wait until lunch, New York lunch, is over, which in this case, this would be over. this committee here, you know what's crazy is he has to do this all over again tomorrow at the same time. Gold new high. We just went over this. Yes, on GLD, but not on gold futures. Gold futures actually had a higher price. What? RTY was the one? What are you talking about?
Finalize the Dodd-Frank section of 956 this year?
I wouldn't
It's been
say
12 years, Chairman.
Yeah, no, I want.
It played a role in the bank failure, Chairman.
If I can answer, what I would like to do is.
So you don't want to do it this year?
Jesus Christ, let him answer.
I mean, I'm being serious. You're saying no?
If the member will allow the witness to answer the question, we've had a good day today, and the gentleman's trying to answer the question.
I would like to understand the problem we're solving, and then I would like to see a proposal that addresses that problem.
Okay. Do you believe people should profit off of bank failure? The executives that made those decisions?
No, not
They
the
should not
executives.
profit.
Well, I would say executives who are responsible for a failed bank should not profit from the failure. Absolutely not.
So they get to walk away with compensation based on their failure?
Well, you're asking
true, it
about a different rule that would have clawback and things like that?
Yeah.
Yeah, so that's something I know you've been looking at for a while.
Yeah.
That's certainly an appropriate thing to look at.
Yeah.
That's not a Fed policy. That's a politician policy. Like, she and all of her friends up there are responsible for implementing that, not him.
They were going to walk away, if they could walk away with not the bonuses, the compensation. I mean, they made money, a significant amount of money for their bank failure. Last question, Chair Powell. Do you believe that the impacts of climate change pose a risk? Have you been talking about that more?
I certainly believe that climate change is real and poses risks over the longer term, sure.
So there have been some that say, higher interest rates actually makes it more difficult to build out the renewable energy projects and other investments required to prevent climate impacts. Do you believe that to be true?
It's not our. I believe that we need to do our job that you've assigned us, which is maximum employment and price stability, and we do it through interest rates. It's not our job to consider the effect on climate change of that, and I think any effect on climate change of that would be kind of minuscule.
Okay. Last question, Chair Powell. Who do you see as the major winners and losers from high interest rates in terms of income groups, age groups, and racial or other demographics?
So the point of high interest rates in the current environment is to bring inflation under control. The people who are hurt the most by inflation, as you know, are people who are on a fixed income, who right away are in trouble when the cost of transportation, food, energy, and when those things go up, they don't have financial resources to deal with it.
Have you looked
We're
at the-
accountable to provide price stability to the American people. Those people benefit the most over time from stable prices.
Gentlelady's time's expired. We'll go to the gentlelady from Missouri, Ms. Wagner, for 5 minutes.
I thank you, Mr. Chairman, and I thank you, Chair Powell, for your service. I want to associate myself with the comments of my colleague, Mr. Himes. I am concerned about banks' commercial real estate exposure, and I do hope that the Fed is doing everything it can to ensure that the exposure that these banks have will continue to be, in your words, manageable, because this is a looming crisis out there, given the workplace changes and dynamics. Chair Powell, in remarks on Bloomberg, Larry Summers, former Treasury Secretary during the Obama administration, stated that, and I quote, "It would be much more productive for our central bank to be focused on the question of real estate portfolios in the banks they supervise than, quote, some of the more abstract and politically driven arguments about various kinds of capital charges on the largest banks." Do you agree, sir, that it would be more productive for Fed supervisors and regulators to keep their eye on the ball, in this case, commercial real estate and other real estate investments?
I absolutely think we need to keep our eye on the ball on commercial real estate, and I think we're doing that.
I hope so. According to your semi-annual report, the median of members on your Monetary Policy Committee estimate that your target overnight interest rate will average 4.1% in 2024. Does that mean that the median number of members anticipate that you will be cutting interest rates sometime this year by as much or more than a full percentage point?
No, it doesn't mean that. Actually, the Summary of Economic Projections showed a median of, this is in the December FOMC, so this is now 3 months old, showed 3 rate cuts this year. So that would be 75 basis points, 3/4 of 1 percentage point. You were quoting the next year's number, so you would add that on. That was through 2025, I believe.
So are you anticipating that there would be more cuts here coming?
It's not, the way I would say it is, we're making economic projections. And so we write down a path of growth, what's happening in the labor market, what happens with inflation, and what goes with those forecasts is an appropriate monetary policy, appropriate interest rates. So we expect inflation to come down, the economy to keep growing, the labor market to remain strong. And if that's the case, it will be appropriate for interest rates to come down, significantly over the coming years.
Good.
What will really happen, though, it's not a plan. What will happen is actually what the economy needs. The economy will do something different from that, and that's what will actually happen.
Chairman Powell, 15 members of Congress, including myself, Ranking Member Sherman, Chairman Barr, and Ranking Member Foster, sent a letter to the prudential regulators regarding the impact that Basel will have on U.S. capital markets activities. The letter highlighted critical areas of our U.S. markets, including securities underwriting, securitization, and derivatives, that will be severely impacted by the Basel proposal. This was also a common theme represented throughout the comment file on the Basel proposal, over 95% of them. Considering that 75% of financing in the U.S. is done through our capital markets, which are the deepest and most liquid in the world, why would the Fed continue to pursue this flawed proposal instead of re-proposing a rule that would not have such a drastic impact on the U.S. economy?
Well, in fact, the capital markets concerns you raised are among those that are.
I think we're going to go short here, guys. I think we're going to go short here. We just have a bunch of these equal highs that I want to see potentially get taken out. But we are very close to lunch. I don't like taking a trade during lunch for sure. But I think this right here is an hourly fair value gap that we traded into. And we still have SMT with ES.
We need
The clock being frozen is out of respect for Ms. Velasquez, or out of good luck. I'm not sure.
The clock.
Well, we'll get staff to listen. We'll just suspend for a moment.
We need to invest in infrastructure for this committee.
Yes. Well, we're trying to do electronic voting, and no, it's hard enough to just get the microphones to work. Madam Clerk, thank you.
You want a long Marvell?
So all the photographers have left.
Why?
So the awkward photos for Trish will be less awkward.
Whoever was trying to long Meta earlier, hopefully your stop limit or whatever hit, because as I said, I don't think it's a good idea. Up to earnings tomorrow? I would like to short NDX 100. Is it a good idea? Was there ever a good idea that started with the question, is this a good idea? VIX under 13 was not the answer. The VIX at this gap was where you should have bought calls. This is the gap. And we filled that on Friday. Did he spill water? Why are they... Did he spill water?
This one's back. Now this one's back. Okay, great. Doesn't want to be replaced. Okay. So,
all right, we'll start over. We're going to restore the clock. Thanks for members' indulgence. Ms. Velasquez, you're recognized for 5 minutes.
So, Mr. Chairman, I was asking you about the property insurance rates are becoming prohibitively expensive or inaccessible for homeowners and developers in our community. The SOX annual report identifies property insurance rates as an increasing risk. And I recently raised this issue with Secretary Yellen. Is the Fed monitoring the rising cost of insurance and its impact on macroeconomy?
So yes, we are very much aware of increases in insurance, including property insurance, and it's been adding meaningfully to inflation. It's not something we have any control or authority over. Same is true of auto insurance. Just insurance generally prices have gone up a lot.
So when we talk about the lack of affordability when it comes to housing, the insurance, the rising cost of insurance is an important factor that is affecting the availability of affordable housing in our communities. And I hope that there are some discussions among the Fed because it is an increasing risk and it's going to have a direct impact on our economy. Chairman Powell, I know you spoke with Chairman McHenry a little bit on inflation and interest rates. Can you explain what evidence you're looking for before inflation has returned to 2% and interest rates can be cut?
Sure. So we're not looking for inflation to go all the way down to 2%. That's not what we're looking for. What we want is just more evidence that will give us more confidence that inflation is on a path down to 2% sustainably. So that will come in the form of good inflation readings, really. We want to see, just a bit more evidence so that we can be confident. We don't want to have a situation where it turns out that the 6 months of good inflation data we had last year, that didn't turn out to be an accurate signal of where underlying inflation is. So we're just being careful, and because the economy is so strong and the labor market's so strong, we think we can and should be careful as we approach that decision.
And when you say evidence, what evidence? If there's anything.
So just more, we'd like to see more good, relatively low inflation readings. We're not looking for better inflation readings than we've had. We're just looking for more of them. And what will happen
I don't like
is,
what he said there.
As we go forward, the 12-month inflation will continue to drop because it'll be lower than early last year.
Thank you. Mr. Chairman, I would like to pick up on where Ms. Tlaib left off and reiterate the importance of the rulemaking on Section 9.
What do you want to short about coin? I mean, you can't short stuff like this, man. You have to have confirmation here. You can't just randomly short this. You can't just randomly short this. I would not short this. You know, it's like if you think that, you know, what goes up must come down is a reason to short anything, you'd go broke because you'd be shorting here, you'd be shorting here, you'd be shorting, you know what I mean? Like, plus coin is tied to Bitcoin, and Bitcoin halving is coming up, right? So if the Bitcoin halving is coming up, then, and Bitcoin is going to go up, it's very, very, very tough to short coin here. I mean, don't be throwing your money away like that, man. Does Square look like a short setup? Kind of. Again, I mean, Square is also tied to Bitcoin. I want to see where oil is right here. Okay, so
letters either opposed, called for a reproposal, or expressed substantial concerns about the Basel III Endgame proposal. And those negative comments came from across the ideological spectrum and from various interests. Without objection, I would ask the chair to include that report into the record. Without objection, I'd ask the chair to include that report.
Without objection.
Thank you. And Mr. Chairman, did you see that report?
I did.
Does that concern you, that 97% of the comments were negative?
So we didn't do our own count, so I can't make an assessment, but I would say it's unlike anything I've seen.
The Basel III comment period ended on the same day as the Fed's data collection on the proposal, which is an odd process since the data should have been collected far earlier, analyzed, and the results should have been available for the public to comment on before the comment period ended. Why did the Federal Reserve choose to do a quantitative impact study during the comment period for the proposal, foreclosing any ability by the public to comment
like a
on
power
the results
three.
of the study?
Well, I mean, the movie's not over. We are where we are, and Vice Chair Barr did commit to putting the QIS out for comment. We will receive those comments, and they'll be.
Yeah, I'm going to exit this for
those comments will be taken into consideration as we think about the path ahead.
Well, speaking of process, you've got your excellent general counsel right behind you there. And I don't want to get into privilege here, but have the lawyers at the Fed raised any process
This looks like a potential power
administrative
three.
procedure
I'm going to wait
Act
until
issues, with the board?
Really, I'm going to wait until lunch
Let me just
is done
say that we're
to take a trade.
We're committed
but
to
I think this can
doing,
go back up to take out these highs.
Actually, and, reasonable and data-based rulemaking in compliance with the administrative procedure.
See, you
Of
have
course,
the
giving the public the ability to comment
consolidation,
on the quantitative data
manipulation,
that has been
and I think
provided,
this can go up to take the
obviously
highs.
is consistent with good process. Sir, Governors Bowman and Waller, Vice Chair Hill, and Director McKernan all dissented on the proposal, and Vice Chair Jefferson expressed concerns with it during his statement. Under your tenure as chair, can you identify any other regulatory proposal which has elicited this much dissent?
No.
Have you in the past acknowledged in front of this committee that you will not move forward with proposals without consensus? Or you have acknowledged that in the past, and we appreciate that commitment to consensus. Have you achieved consensus yet on the Basel proposal?
Let me say I am confident that we will, but that's a process that we're, as I mentioned, we're evaluating the comments. We're just coming to the place where we're going to start talking about the path ahead, and I am confident that we'll achieve very broad
I think this is
support
going up
on
to
the
take
board.
out these
Mr.
highs.
Chairman, do you agree that the heterogeneity and business model diversity within the banking sector contributes to system-wide financial stability?
I strongly do.
And do you agree that a concentrated business model in the banking sector would present a potentially systemic risk?
Potential.
I'm going to wait until we get a 5-minute. I'm going to wait until we get a 5-minute confirmation, which will probably happen after lunch. But I think this will, in the short term, take out this resting liquidity here. I actually wouldn't mind longing this for a scalp, but it's only like 10 points. All right, thank God I closed the short. I think it takes out this resting liquidity here, these equal highs. Oh my God, that'd be so funny if it PO3s within a PO3. That would be so fucking funny if it PO3s within a PO3. You know what's so funny though is my stop would have gotten wrecked. Yeah, this is going to PO3 within a PO3. What's funny is my stop would have gotten wrecked, and then it would have came back down to my entry, and I would have been really, 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 really fucking pissed. So I closed it for near break even. It was like a minimal loss, which thank God, because I would have taken the full L on the stop limit. All right. What was I looking at? Fuck. I think oil has... Let me see. Let me find out. Took the total loss. What trade did you take? In Amazon short, do you think I could get to pre-market low? Yeah. Well, it already did get to pre-market low. This was pre-market low. The NQ short, but did not get out at BR. Well, gotta be nimble, my man. Yeah, I think the actual move will happen after Powell's done. I'm trapped in ES short. What The fuck? How are you trapped? SPY is undumpable? I would not short the SPY, guys. The S&P is a lot stronger than NQ. I'm looking to short NQ eventually, but I'm gonna. I was thinking about doing it earlier, but it's 11:46. We hit lunch in 14 minutes. Powell will be done talking by 1 p.m. Eastern, and at that point, if this SMT is still there, I would not look to short ES. I would look to short NQ.
Have greatly improved their liquidity position. So that's the thing that we're working on. Okay. As you probably know, we're also working on some liquidity rules which will strengthen our framework of liquidity rules. But that's something we haven't proposed yet.
Let me ask you something off topic. So we know that Russia has about $300 billion in U.S. We've frozen assets. Russian assets of about $300 billion between U.S. and European banks. You want to comment on that?
Jesus Christ, they're asking about Russia. Do you ever put a fib on a big candle? I have no idea what that means. I just pick a random big candle and put a fib on it? This whole meeting is off topic. Yeah, exactly. Gold looks untradeable. Oil looks pretty clean. And I'm not looking to take any trades on the indices until after lunch. Your camera's blurry? Fuck. Why does this camera keep doing that? Make it blurry again? The hell? Donald has like an obsession with Marvel. All right, bro, long it. You say you're longing it, right? Long it. Oil pump normally drops the market? No, not really. Darius, appreciate your donation, man. Thank you. Darius donating to St. Jude's. Appreciate it, man.
Congress worked to pass
there's no trace to take
catering
here.
of regulations to the size of a financial institution. This is meant to protect banks of all sizes and allow for families and business.
I think if I think if Tesla can get above this level, I think there could be an intraday long on Tesla. Only to like the 181.5 range. Trade Marvell, you will like it. Man, this guy is so fucking annoying, bro. See, this is what I'm talking about. These highs, remember I said that I think NQ will jump up, not only take my stop limit if I shorted it, but it's going to take out these highs. So thankfully, I didn't short this. And now, if QQQ does not touch yesterday high, is it correct to assume that we will the downtrend? I don't know what that means. That we will what the downtrend? Expecting a reversal shortly? After lunch. Not now. After lunch. Man, dodged 2 bullets today. Shit. Dodged the short that I was going to take earlier on ES, and then dodged the NQ short that I was going to take up here. Do you use order flow for trade confirmations? No, I don't. I think that is a completely bogus way to trade. Yes, there's a RTH above, but it is very high above. And it is from a previous day. So, sure, we could trade into that. But, well, that's definitely what ES is going for. So, here's the crazy thing, guys. NQ mitigated the RTH gap here. And ES didn't. And now ES is mitigating the RTH gap here. This is so crazy. ES is mitigating the RTH gap here, and NQ isn't. Wild. Armchair lockup expiration coming March 12th. Okay. If you know about it, how are you going to trade off of that known information?
By raising interest rates. But as the ranking member points out, the big issue is housing. And your measure of inflation seems to treat all Americans as renters, even though 2/3 are homeowners. And so when interest rates go up, that's an increase in the cost of living for anyone with an adjustable rate mortgage, anybody looking to buy a house, anybody with a home equity loan.
All right. So we took out high of the day. Thankfully, closed the short that I was trying to take earlier. Lunch is upon us in 4 minutes. Would be crazy if ES actually mitigated this RTH gap here. That would be wild. During lunch, actually, I would prefer that it does that during lunch, to be honest. And if NQ doesn't, then we'll have another divergence to trade on NQ. Can you take a look at SMH ETF and provide your opinion? What kind of opinion would you like me to provide?
Is very necessary for first-time home buyers. And you've got a system where if you make investments in long-term bonds on Wall Street and you put them in the hold-to-maturity category, you don't have to recognize the losses and mark-to-market. So I hope you'll look at these in terms of the competition between Wayne Street and Wall Street for bank loans. Finally, we go to clean energy investment.
Jesus Christ. No, I don't use moving averages. No, I don't use footprint or order flow. I just realized that we got to 500 likes. All right, I got to do a giveaway for a hoodie. What question should we ask? All right, let's see. Let's see. We should ask a question. I'm about to do a giveaway for a hoodie. Thank you guys for 500 likes. I totally forgot that. Houthis versus Hamas? What the fuck? No, not that question. Not that question. Hold on. I'm going to think of a really, really good question. Okay. What is, and I'm just going to take a screenshot, and the first person who has the answer right in the screenshot is going to get a hoodie, okay? What is the greatest selling album of all time by a group? Greatest selling album of all time by a group. I love how people are putting in Michael Jackson like he's a group. All right, I took a screenshot. Let's see if anyone got it right. The first person who gets it right. That's it right there. Greatest Hits by the Eagles. That is the best-selling group album of all time. The best-selling album of all time is Michael Jackson Thriller. Correct. That right there is the best-selling group album of all time. So Joe Bathgate. Oh, he's already in the Discord. I'll hit you up, bro. I'm going to send you a hoodie. Good job. Not the fucking Eagles? Yes, it's the Eagles. All right. I'm going to break for lunch. I'm going to then go to the Discord and take a trade from there. But what I want to see, for those of you that are in the Discord, I'll see you in there. For those of you that aren't, I don't know what you're doing. Go to the description and join. $99 a month for life if you use that code. But this is what I'm looking at. I'm looking to see if ES can completely mitigate its RTH gap, in which case I will look to see whether NQ then finds weakness thereafter, because the short is going to come from NQ and not from ES in my eyes. There might not be a short, by the way. It really depends on what happens here. It really depends on what happens here. So I'm going to take a break during lunch, and then I will see you guys on the Discord. But appreciate you joining. Dodged 2 bullets, really, and didn't really take there wasn't really a optimal trade to take besides scalps here and there. But hopefully we'll find one after lunch. I'll see you guys on the next one. We will probably do this all over again tomorrow. So, but I'll see you guys in the next one. All right. Peace.